Money has been a rough run for Netflix so far this year. The streaming giant down 6% in 2026 and 15% since striking that deal to buy Warner Brothers Discovery assets last month. The company reports earnings on Tuesday. Our Julia Borston has more on what to expect from what will inevitably a very closely watched report and conference call. Julia.
That's right, Leslie. Investors will be examining earnings to see what the quarterly numbers say about Netflix's reason to do the deal. Now, because Netflix no longer reports subscriber numbers as it diversifies into advertising, the key number in focus is revenue growth. It's projected to be up 16.8% from the year-ago quarter. That's slightly slower than the third quarter's 17.2% growth. So the question is whether the company can beat those expectations and accelerate growth from Q3 to Q4. Now, earnings per share are projected to increase by 29%. If you look at Netflix shares since its last earnings, they are down 29% as recent results have sparked concerns about weakening engagement amid an increasingly competitive market. Acquiring Warner Brothers Discovery's studio and streaming division would supercharge Netflix's content. So we'll have to see if the company announces that it's maybe amending its offer to an all-cash offer to speed up the close, which is something that's been reported, Leslie.
Yeah, absolutely. And of course, they're in a quiet period probably leading up to that report. Julia, thank you. Looking forward to Tuesday. And the options market is looking forward to Tuesday as well. It's optimistic that that report can help Netflix turn shares around. Mike Coe has the action. Mike.
Yeah, we saw above average call volume, which is interesting ahead of a 3-day weekend. Usually you would see volumes depressed a little bit. Calls outpace puts by about 2 to 1. Right now, the options market is implying a move of about 7% after the report on Tuesday and just under 8% by the end of the week. If we compare that to the last 8 quarters, that's actually slightly less than the company has actually moved. But where we saw a lot of that activity was in call options that expire at the end of next week. The busiest of those contracts were the 90 strike calls. We saw over 7,200 of those trading for just under $2.60 a contract. And look, if they hit those numbers that Julia was just talking about, it's trading only about 27 times forward earnings. And I would actually say that it's very reasonably valued and that this pullback, assuming that they hit those numbers, might be an opportunity on the long side.
Yeah, and not to mention, you've also got a bunch of merger arb traders in there as well, kind of also having a role. Steve, what's your take?
I think plenty of people were waiting for the stock to sell off. Since June now, split adjusted, the stock's off about 35%. When you look at it on a chart, there's people that have been waiting to get into it, but this is definitely marking a pivot from creating everything in-house to buying. So it could be dilutive to their business strategy. You know, they are the best at what they do. They are, it's Netflix and it's everybody else, but I think this is a definite pivot in what investors appreciate from Netflix.
Well, I mean, I just, their licensing fees and what they pay every year to people like Warner Brothers, I mean, this is part of the story. I mean, ultimately, I think this is it's an acquisition that's not that hard to understand. There's no question that Netflix has done this in an asset-light way. But I would just get back to what Mike's pointed to on valuation. I think it is time to buy Netflix. I do think the expectations in here. Let's not confuse the concern about a stock that's run out of momentum, that was really kind of relatively expensive, and some questions about a deal. Their core business is alive and well, and it's crushing it. And I think they're going to continue to show. Those fourth quarter numbers also have a price increase, so there are no real comps on that. Those numbers are going to be great. I don't think there's any question, and I think the paid additions is north of 14 million in terms of subs. Even if they're not breaking it out, that's what the street's looking for, and I think that's what they need to deliver.
Yeah, and there's just so much competition out there. They want to be offensive and making sure that no one else acquires something that can make them bigger.